Hey guys, Kay Kim here from Traders Club. Thank you for tuning in today. Today I'm going to be looking at overall overall market index, and just a few stocks I'm watching, I'm trading, that I'm currently involved in. And today we had a just huge turnaround from the bulls, and just be honest with you, it caught me by surprise, and I did not expect something like that to happen today. So, but we all know that unthinkable do happen in the market, and they don't happen a lot. You know what I mean? It's rare that something like this happen in 3 days. I mean, if you just look around, look at the past record of Dow Jones here and this ETF, they goes up and down, up and down, up and down. They trend. They don't just do 3 days of volatility. They don't do up and down in 3 days. And even when they do something like that, it's initially a trend. It's a part of a trend. What it doesn't do it at the top. At the top, what it does is it forms some kind of a consolidation pattern, maybe a triple top, bigger scale of double top, stuff like that. But you don't see much of a just grinding, and all of a sudden you get just 3 days of a turnaround, what I mean, back to back. We don't see that. And what I see really in a psychological way is that bears really took it down. You know what I mean? You looked at the volume here on Monday, they just took this thing down. I mean, just for how many, this is about a month of grind and a month of just moving sideways, took it down. Tuesday we rested, and I really thought we might have another resting pattern, another little candle, possibly forming a bear flag with the low volume. But no, what happened was today, during the afternoon, I think towards the end, bulls came in and just got all the losses back. But what I want you to see is this level. This is a weekly chart on Dow Jones, and I've been talking about this for months now, and this is rising wedge pattern. This has been served as very strong resistance level. Okay, it has been almost 1, 2, 3, 4, 5, going into 5 weeks, the 5th week now, and just really grinding at this level because it wants to push through it. And every time it gets close to that level, there's a lot of selling pressure. That's when the bears come in and say, no, you're not gonna get in. I'm not gonna let you come into my turf. And so they push. And what happens is then it created this channeling action here, thus creating this rising wedge pattern. And I want you to remember this resistance level as we go to 65 minutes on Dow Jones here. On Dow Jones at 65 minutes, we do have this is the same line, okay? This is the same the resistance that we saw on weekly that comes right through here in the 65 minutes. We are forming this megaphone formation. How this trading range is getting wider and wider as we go, and this is where it could break on either side. We don't know which way it's going to break. This isn't a continuation pattern. This is just consolidation pattern where it could break to the upside or it could break to the downside. But nobody knows when and how it's going to happen. But what I could see with the facts that are given to me today is that what I want you to take attention is this candle here, and this candle, and this one right over here. That doji right here, right at the resistance level. We talked about that on a weekly chart. That's the same one here. That doji with high volume, that means something. I told you that doji happens either at the top or at the bottom. It always means something with high volume. And here, what we look like a shooting star. It wasn't a textbook shooting star, but it had a sentiment of a shooting star, which had high volume. And which then the bears came in and really pressured this thing down. And same thing here in just a few days, bears came in to pressure that thing down at that important resistance level that we've been looking on the weekly chart. On the weekly chart that has been formed in several years, I believe. And so right now we have textbook shooting star, which means we have a small body, and the wick is about 3 times or higher length than the body. So we have a very small body, we got a long wick, and what I really want you to pay attention is this volume. That's high volume, and I was watching this on intraday on my 65-minute chart here, and so I know it all happened at the last 30 minutes or so. If I just draw a line here on this 65-minute chart, you can see that there's a lot of gaps here. It means that this is very unusually high volume, and when you see a shooting star and unusually high volume right at this important pivot level and with the reversal pattern, then you pay attention. Just like you pay attention here, you pay attention here. And also what I want you to look at is, as we were trending up, volume really came in. So that's a very solid trend here, because volume came and supported. But just about this level here, that's when bulls got tired, because as it continued to ride higher, the volume started to dry up. As you can see that at this last 4 hours or so, 3 hours or so, volume really dried up. And when volume did come back, we formed this shooting star. So that shooting star right now giving me a lot of warning signals, and these lights are flaring everywhere. Look at me, something's gonna happen. Again, technical analysis, we work with probabilities. The last time when we form a doji and a shooting star light candle at this resistance level with high volumes, it retraced. Doesn't mean that that shooting star didn't make reverse the trend completely, but at least we could forecast the next couple days that this could actually come back down and do that, and test this 200 SMA on this 65-minute chart and see if we can maybe bounce from here or go down further. Okay, and again, this being 65 minutes, the potency of this shooting star probably only gonna last maybe a day or two, maybe 3 days. But something to watch out, because you can see that the volume today on Dow Jones it's there. It's not really low. It's not like this, but compared to the size of the candle, it's fair. It's fair, but you know what I mean? It's fair, but it's not something what we saw on Monday with high volume. And many times we see a huge move like that. We usually see a huge volume as well. So I mean, even here we have this huge bullish candle with a fair volume. It wasn't like high as this one, it wasn't high as that one. And what happened, it really didn't have that push through. It just kind of grind for sideways, and then that really didn't amount to anything really. So that move, it had a fair volume, but yet it wasn't high enough, I guess. And here what I'm saying is, here at that volume, with this volume, or at that candle with that volume, hey, you know what, I think there's possibility that we could continue push. But like I've been showing you on this weekly chart, that this has been strong resistance, and I just showed you on 65-minute chart that, hey, we got the shooting star with high volume here. And so when I go back to daily, and I say, are we able to break this? You know what I mean? That's the question for Dow Jones, is that we break above and close above tomorrow, all the bets are off for bearishness, because then I'm going to start thinking, I'm going to start looking at this, I'm going to treat this market as a bullish market. And we are still in bullish market, we're still in bullish trend, but I haven't been treating like it's a bullish market, because I saw the grind and then I saw Monday tankage. So what I started treating like was, there might be a big correction coming up here, at least to this level. And if we break that, even feel this gap, or even back here where 100 SMA hanging out and 200 SMA. So we got 50, 100, 200. Those are the levels. And minimum comeback check this, the all-time highs here as a new support. So that's kind of how I was treating this market as. But even after today, I'm still neutral. Okay, I'm not going to start getting into long positions. I'm still neutral, and like I showed on my 65-minute chart, weekly chart, this level is very, very strong resistance level. So we don't break that tomorrow, and if we start fizzling around here, if we get maybe a doji or something like this, or even tomorrow, it could just, it could just start to retrace a little bit, maybe to 50%. You know what I mean? I'm just kind of assuming right now, but given the fact that we have on 65, given the fact of that resistance level being very strong, and that 65 minutes chart, that same resistance level on this megaphone pattern here, and that shooting star occurring just right at that perfect resistance level here, with high volume, definitely I'm not gonna be betting on bullish side right now. Let's go to SPY. And SPY's, what's something different about SPY's? SPY's actually, if we go to 65-minute chart on SPY, we're making lower highs, don't we? Lower lows, lower highs is different. In Dow Jones we did a megaphone style, but on SPY we are making lower highs and lower lows, and this is definition of a trend establishing. And right now we could say, hey, this look like we're there's some resistance level here, but it's not established. You know what I mean? It's only one time, two time, at least it has to be three times to establish that truly well formed resistance level downtrend line, but this hasn't been established. It is in the process of formation. But what I want you to look at is that same level, that resistance, potential resistance level. We have a shooting star and we have a high volume, just like Dow Jones. So that confirms something. That tells me something, because not only we have that on Dow Jones, we also have it in SPY. So that's something to be note of going into tomorrow. And like I said, if we just go further back on this 65-minute chart, it really looks like we have already broken this major support level here, and we have also broken the 200 SMA on the 65-minute chart on SPY. So and then we're also possibly forming this resistance level. So even and we have that shooting star on 65-minute with a high volume. So even when we go to daily, with high volume like this, or high candle like that, and volume is low, it's a lot lower than what we did on Dow Jones. I mean, compared to the candle, okay, how big the candle is, the volume is low. Okay, even on this day we had this huge bullish candle with huge volume, and we have almost same size of candle with low volume. So that's something to note of. That's something to recognize and say, hey, you know what, this I don't know, there's maybe just maybe some congestion that might be happening next couple days. I don't know if we're gonna push through yet, because we looked at 65-minute chart in the shooting star. Also, if you go to weekly on SPY, similar pattern is happening here. We're making this rising wedge channel, and that has been served as strong resistance level, and that has been created for about 1, 2, 3, 40 years of worth, and only a few times it was able to peak above it a little bit and came back down. It really never stayed, it never really went up. And so definitely is something to be cautious, and there's high probability that it's going to come back down to test that that lower channel, the support area of this rising wedge. Let's go to QQQ here real quick. When we look at QQQ, we do have a long upper wick that shows that bears really came at the last minute or so. I think it was like 30 minutes that I was watching this on intraday, because I've been shorting here and been shorting here and shorting. I'm still holding my put options here, and my stop was just above then, and I had a huge gain, and I decided not to take a profit because I'm looking at it as a more bigger picture, and I want to profit from more bigger scale, and I don't day trade. So, and I think it was good to maybe get out just like I did on my Citibank, but I just didn't you know what I mean, I didn't expect the QQQ to just come up that fast, and I didn't move my stop down. Anyway, if you go to 65 minutes, looks similar to SPY. However, we don't have shooting star. We did have shooting star here. Really wasn't backed up by any volume. Volume was low, so that really didn't work out. However, and there's some shooting star there, and this was backed up by high volume, you can see. So that's why volume confirmation is very important on these candles. But what we have is this, if you put this last 2 hours candle together, we have tweezer top. Okay, tweezer top is almost similar size black and white candle. This is tweezer top reversal, and it's one of the weaker signal of reversal. However, when it's backed up by this just high volume, you can see that when we draw a line like that, there's a lot of spaces, which means it's unusually high volume, and this all happened last 30 minutes or so. Not only that, if you look at here, this level has been served as strong support for about like 25 days or so, and so now that is becoming an old resistance. Okay, that is becoming an old resistance. So and this tweezer top is happening right at the resistance level, just like this shooting star formed right at the resistance with the high volume. That's saying it's exactly a similar thing is happening. The reversal pattern, it's not a shooting star, but it's a tweezer reversal pattern is happening at that level. So can we expect some kind of retracement? Yes, I would say that we are, because also you can see that we're making this is almost like lower high, and this is lower lows. They are almost same height though, but we are kind of in the process of forming that. The definition of a trend is that we make lower highs and lower lows. But here's a one bullish thing that I thought is happening here on 65-minute chart, but I'm not sure if it could continue. We do have, this is 65-minute chart on QQQ. We do have bullish divergence on 65-minute chart, and I'm wondering though if this move has already done, or can it come and then can it go higher? You know what I mean? I mean, this could essentially push it all the way up. So at this point, we don't know. We have some bullish momentum coming here with this bullish divergence happening here, and also we do have this resistance level, old support becoming a new resistance. Same with this candlestick pattern. So we have a bulls bears fighting here. Okay, we got resistance level to watch out. We have this reversal pattern on the candlesticks. Watch out with the high volume. That's bear's weapon. Bull's weapon right now really is the momentum of the market and this bullish divergence on the 65 minutes. Also, bulls are not really an advantage of this minor primary trend, I would say, because we have been grinding for so long. So I'm not sure if this primary trend would really be an effect. But there is one thing I want to see then on this daily chart on QQQ is that look at this 100 SMA. Okay, this have been worked as very strong resistance, and then it flipped side and then become a very strong support, and then now supporting the bulls. So I mean, can it continue to support the bulls so then bulls can go up, or is it the bears gonna come and really push it down? So this is where, you know what I mean, the battle is gonna happen. So we gotta watch this level, and this level here, if it comes up back here and maybe test this resistance, we could even form a bigger double top-ish formation. But I would rather, well, because I am holding bearish positions, what I would want to see, this is what I want to see, I'm not saying that's going to happen, that tomorrow we throw a doji here, okay, maybe a spinning top, and then next day just the bearish continue to roll down and goes up and down, and then initially fill this gap and then just come back down here. That's what I'm looking at. Also, I'm looking at this bigger scale of head and shoulders here. So, and that's exactly the right shoulder that this huge bearish candle happened. So again, looking at the overall market, we just looked at Dow Jones and also looked at S&P 500 and Nasdaq composite using ETFs. And you know what I mean, today definitely bulls threatened the bears with some low volume, but last hour or so, bears really came in, the sellers really rushed in, and we have formed some reversal pattern on candlestick on 65 minutes. So like I've showed you before, we had a tweezer top and also the shooting stars with high volume. So those are something to watch out tomorrow morning, because tomorrow morning it could just start to retrace and pull back, and even strong rate. Because I always say when when bears do something like that, you know, once they do something like that, I don't know if they're gonna just let bulls take over. So it could be a pretty bloody fight where it just becomes very volatile. You know what I mean? It becomes very volatile. So I would wait till maybe settle down a little bit and to short these indexes. But if you want to be more aggressive, you know, then maybe looking at a 65-minute chart tomorrow, and you know, if it's followed through, we can try to short there and ride it down to this 100 SMA on this 65-minute chart. Very quickly though, I do want to look at Apple here real quick. Apple is continue to grind 10 EMA here. That's a blue line's 10 EMA, and we do have this rising volume last 3 days, but stock really didn't do anything. It kind of moved sideways last 5 days or so. So I'm not sure what this mean, what this be accounted for. I mean, is it bullish or bearish? I don't know. I mean, we have the spinning top with the high volume, and the spinning top is not really a reverse pattern, it's just resting pattern, but we do have high volume. So what I can see was there's a lot of volatility, and we can see that when we go to 65-minute chart on Apple, you can see that we have a lot of volatility here. Just ending because with the conference that happened earlier today, so a lot of people are just anxious to see what's gonna happen, just up and down movement here. So that's kind of why we had high volume. But just looking at the overall trend, it's still bearish. I added some positions there, and I've been shorting ever since here, and added a couple more there. And so I'm still bearish. But here's what I wanted you guys to see. There is something I found. There is a bullish sentiment that could be cautious for bears. People who are holding, you know, bearish positions or shorting or put options. Here, this is where it gets a little bit confusing, and it's not really so we got, okay, so we have what it looks like possible bullish divergence here. Okay, however, if we drive from here, it's really not a divergence, but it doesn't even draw from this level. So it kind of ruins a little bit. It's not clean divergence, but I would say that there is some, I say this way, this bullish divergence, because of we have, it's not perfectly formed here, and we had to drive from here, even though this is the low. Originally this is where you have to drive, but you can't drive from here. It doesn't work that way. You have to drive from this low. So because of that, this divergence loses, it diminishes its potency. But there is a sentiment of divergence possibly working out, because if this divergence works out, this could actually push this thing higher, and we could even come to test that, you know, the long-term downtrend resistance, and I believe that there's a 50 EMA coming here, so it could happen. As of today, we don't have any significance of that yet, but we have indication that this bullish divergence could play out. Again, this bullish divergence, it loses a lot of its power just because it's not formed very well. It's not formed very well. It's here. I talk a lot about divergence, and I put a lot of weight on it, and you can see this is a clean divergence. Okay, this is clean divergence. There's nothing in between here. But when we go to daily, like I said, you have to drive here to form a divergence, but this is the low, so you actually supposed to drive from here. But when I try to drive from there, it doesn't work. So that's kind of why, is this a divergence that could maybe even put a bottom here, and then, you know, as a catalyst to even find the ultimate bottom to continue going higher and maybe make the investors happy. As of today, I don't know. Again, it's not a clean divergence, but Apple do respect this divergence very well. But I wanted you to see that last time when the divergence formed, it did not respect at all. Here we also have, I was also looking at this divergence here. This divergence, we broke out of this triangle formation with a huge candle. We even gapped up here, and for sure that looked like this is gonna, like, you know what I mean, this is the bottom. Everybody was calling this as a bottom. This is the bottom, and everything said that this is a bottom. But what happened? What happened was this bullish divergence was never honored. It was never honored. So in here we don't even have clean divergence. It's just kind of, so you know, I don't know how it's gonna play out. I'm just looking at the price itself and the moving averages here, and the, you know, these indicators and or the indications of resistance levels. And when we go to weekly chart, we are continuing to head lower, and we form this bear flag here, bearish continuation here, and this was a flag there. So we're just resting on this just recent support, and if that support's broken, everything is telling me that it's gonna fill the gap at around 425. And you guys seen my post, 360 is where I am calling it as the bottom. So I wouldn't short it now, I wouldn't go long now. There's more you know, confirmation is needed, but just what I said, you know, just looking at these other indications and moving average, it looks bearish. But there's one bullish thing about it, is that bullish divergence that I just showed you. There's some sentiment of that. So yeah, I think that's about it. So, well, thank you very much for tuning in today, guys, and thank you guys for following my blog and following the YouTube channel, and hope you guys have a great week and great trading days. All right, talk to you guys later. Bye.